Not since 1991 has the world seen oil prices crash to rock-bottom prices, as a price war feud between Russia and Saudi Arabia has taken place, with both oil-producing states claiming they will not cap production in order to stabilize the market. Oil prices collapsed around 34% in the US, to prices as low as $27.34 per barrel. Crude fell 27% to $30.04 per barrel, and Brent Crude dropped 26% to $33.49 per barrel, as the world prepares for Russia and Saudi Arabia to flood the oil market in order to retake their global share of sales. The trade war takes place after Russia refused to align to OPEC's demands for reducing output, with Russia distancing itself from a 2017 agreement with OPEC to align to certain output production figures.
We decided to accept to recommend to the OPEC and non-OPEC meetings tomorrow 1.5 million barrels.
Yet with figures now so low, both Russia and the Saudis need to attempt to re-stabilize the market, with estimated target figures needed to be reached at around $42 per barrel for Russia and $80 per barrel for the Saudis, in order for both states to break even. The US President Donald Trump has weighed in on the story, tweeting that he's happy for the consumer, who will no doubt see gas prices come down. Yet the question needs to be raised: is Trump using this oil price war as an indirect jab at Russia, using Saudi gloves, whom he knows can absorb the impact better than the Russians? Trump has often used the lower gas prices guaranteed motto as part of his election campaign, yet a long-term fall in the prices could see the US fall into recession, something that no president wants to be accredited with. When the Wall Street opening bell rang on Monday in New York, prices plummeted over 7%, with automatic circuit breakers being triggered, ceasing trading on the floor in order to avoid a total catastrophe.
The market stopped for 15 minutes, and what does that do? It gives people a chance to sort of stabilize, get the buyers who are interested involved, sellers interested involved, disengage from the emotionality of panic mode, and try and get a sense of really what's going on.
As the drop hit 7.29%, the Dow Jones index fell over 1,880 points, bringing the index to below 24,000 at 23,979. Following a 15-minute circuit break, the S&P equally fell 7%, with the Nasdaq also crashing down at 6.86%. Following the recovery period of 15 minutes, the prices rose slightly, stabling at around a loss of 5%. However, with markets still very unstable, we'll have to witness a day-to-day recovery. Should one happen, failure to recover could lead to worse things ahead.
Well, in the short term, I think we should be worried, but I also believe that even if we go into bear market territory, I don't think it'll be long-lasting, and I suspect that what's happening in the bond market and of course in the oil market is a good indication that we could be headed for a recession, global recession. There again, I think it'll be just a very short-term situation.
The coronavirus has had a huge impact on global markets, yet this crash has added insult to injury to certain industries, with the travel industry being most affected, with Boeing losing 48% of its share value and Norwegian Cruises losing 17% of theirs. What the future now holds remains to be seen. The question that now must be raised is whether the stock market crash will bring Saudi Arabia and Russia back to the table in order for them to come to some kind of agreement on a production limitation clause.